Hi guys, welcome to another episode of the FXP weekly analysis. If you are new to this, I would like to welcome you. What we do over here is over the weekend we'll share with you some of the potential watch lists that we are watching over the weekend and some of the potential setups that might take off during the week, right, during the coming week itself. And for those who have been following for us for some period of time, really appreciate that. If you are able to like and subscribe to our channel, that would be fantastic, right? So the first thing that I want to share with you is on this pair, Euro Dollar. If you look at this chart itself, the trend is obviously in the bearish sentiment, right? It's in the downtrend. So what we like to do is we wouldn't want to go against the trend, but we want to find a potential setup that is in line with it, meaning you want to sell into the market, right? And what we have over here is a potential bad pattern setting up, right? So those who have been following us for some time knows that harmonic patterns, right, be it bad, godly, butterfly or cipher pattern, is part of our trading plan, right? So over here what we have is a potential bad pattern that is forming, right? And if you are familiar with bad pattern completes around the 88.6 level. And if you look left, alright, scroll towards the left side, what you see is that there's some minor support and resistance structural level as well. Right? So this gives us the extra confidence that this pattern, when it completes, we will want to sell into it. Right? So if price does comes up to this level, we'll be looking to short the market with our stops, right, just slightly above our X point. And how we set our targets is we pull Fibonacci from point A to point D. And our first target will be just above the 382. And for second TP, which level we'll be looking at is at the 61.8 level. Right. Since we are here, I would like to bring you to the attention of risk to reward concept. Right. For those who have been watching for some time, you understand what is risk to reward ratio, and we always emphasize that. Right. That is part of our money management rule as well. Right. So if you look at this, right, what it means over here, risk to reward ratio, 1.74. What it simply means is that for every dollar that you risk, right, in this trade, there is a potential that if it hits TP, you get back 1.74 times more. Right, so this is only for TP1. And if you look at TP2, what we have is a risk to reward ratio of 3. So this is really good, right? A decent risk to reward ratio is always more than 1:1. Right, we couldn't emphasize how important this is, right? Because in trading, it's always a probability game, right? So this is the thing that we are looking for, a pattern or a potential setup that we're looking for on the euro dollar. The next pair I want to bring attention to is on the pound dollar, which is on the H1 time frame. Okay, so if you look at this chart, what we have in last week or over a period last 2 weeks itself, right, is price is consolidating. And last week itself, what price did was that it break below that consolidation area. This tells us that price is currently in a downwards bearish momentum. And what we are looking for, according to our trade plan again, is that we always go in line with the overall trend. And for this case, what we'll be looking for is a level that is decent enough for us to enter a short trade. Right. So what we have in our plan is that we have a setup, alright, or a strategy to engage the market if we see something like this. So what you see over here is that price forms a higher high. And over here in this RSI, this oscillator indicator, it doesn't form a higher high, but instead it forms at the same level. So what we see over here is a divergence, right? Because this goes up, but this doesn't go up. So there's a difference in direction. So that's a divergence, right? And what you see is price broke down and now it's going up. So it is currently in a retracement. And what we want to look out for is we pull in our Fibonacci 2. And what we want to look out for is at the 61.8 level right here. And once again, if you look left, what you see are bounces. Alright, these bounces signifies structural support and resistance level. So this gives us the extra confidence, right, in shorting into the market at this particular level. So no doubt, if price does come out, what we do is we're gonna short it with our stops just above the 786, and our TP1 will be at the recent low. And once again, right, look at the risk to reward ratio. 1:2.74. This is a very, very decent one. Right? It simply means that for every trade that you win, you can cover 2 of your losing trade and still profit. Right? And this is only TP1. So what I want to show you is TP2. Right? So how we do that is we pull Fibonacci extension, and our second target will be at the 127 level. Okay, our stops will be about the same region, and look at the risk to reward ratio. 1:4.05. That is really amazing, right? So hopefully, or not hopefully, right? If price just comes back up to this level, we'll be shorting it and targeting our first target here and second target over at the 127 extension. So this is what we'll be looking out for in pound dollar. The following pair, the next one is Aussie dollar. Right, if you look at this chart and the pound dollar chart, it's very, very similar. So what we're looking for is also once again a short entry, because the trend is down and our trading plan tells us that we have to stick in line with the current trend. So once again, we pull in our Fibonacci 2, right? We pull in from the recent high as well. What you see is there is a confluence of Fibonacci over here, right? A 618 and a 50% retracement Fibonacci is very, very close, right? And if you drop a horizontal line at this level and you look left, this level, you're seeing a lot of structural levels, all right? Support and resistance area. This once again gives us the extra confidence that should price comes up to this level, this region, alright, the 618 and 50% region, this gives us the confidence that, you know, if price comes back up, we'll be able to short it and expecting price to bounce down, right? A trend continuation setup. And once again, our stops will be just above the 786 level, and our first target will be at the recent low over here. Right, and our second target will be using the Fibonacci extension, right, from the low to the high, right over here, and we'll be aiming for the 127. Right, this is it. This stops, and then our target TP2 will be over here. All right. So once again, if you look at the risk to reward ratio, the first TP gives us a 1:2.4, and the second one gives us a risk to reward ratio of 1:3.72. Once again, very, very decent risk to reward ratio. Okay, the other pair that we want to look through is the Euro New Zealand. All right, let me just string this chart a little bit. So let me just, you know, pause the tape. All right, pause this video and look at this chart. Do you see any setup or potential pattern forming? Alright, so for those who are familiar with harmonic trading, what you see is a bad pattern. Right, some of you would say that, you know, this B retracement is very close to 618. Perhaps it is a godly pattern, right over here. Some of you might think that, oh, you know, it's so close to 618. Why not the godly? Right, once again, you fall back to your trading plan. So in our trading plan, it's very, very clear. If it never touch 618, right, meaning it goes close but never touch 618, we say it is a bad pattern. Right, we do not take it as a godly pattern. Right, so if you know where does the bad pattern complete, the bad pattern completes at 88.6 level, right here. So what you see is that this pattern has been completed, right? And you see a nice rejection Alright, and price is currently hovering over at this PRZ area. So if you're still interested into taking this trade, you still have the opportunity to do so. But having said that, right, you need to understand that a harmonic pattern doesn't necessarily mean that price has to respect that pattern. Alright, you need to understand that. Alright, so be prepared mentally to take losses as well in trading. Alright, so what I want to show you is then how we set our stops and TP. Alright, so once again, if you enter here, alright, your stops will be above your X point, so slightly above it. And how we set TP is using a Fibonacci retracement from an A point to a D point, and the first target will be at the 382, and the second target will be at the 618. Right. So once again, if you check your risk to reward ratio, the first target gives you a ratio of 2.1, and the second target gives you a ratio of 3.46. Very decent setup. Alright, so this is once again a completed pattern. So it's up to you to decide whether you still want to take this trade. The last one that I want to share with you is the SnP500. So look at this. What trend is it in? Right, downtrend. Right, why is it a downtrend? Right, I want to show you is that what I want to share with you is that how we define a downtrend. Right, what you look over here is that price is forming a lower low and lower high. So you have a series of lower low and lower high. With that, we can say that price is currently in a downtrend movement. And once again, following our trade plan, if price is in a downtrend, we'll be looking for only short opportunities. And similarly, we like to pull in our Fibonacci tool to find for areas which confluence. And what you see is over here, right? It's a 618 and 786 confluence. So what we do is we drop a line, you look left. Very interesting. We have some rejections over here and the previous rejections over here. Two rejection, right? So this gives us a little bit more confidence should price comes back up, that we can short this level, right, at the 618 and 786. Right, so I want to show you if we short over here, our stops will go above the 786, and our target will be at the recent low. That's our first TP. For our second TP, we'll pull in the extension and measure the 127. Right, aiming for the 127 level. So if you once again, look at our risk to reward ratio, the first TP gives you a ratio of 2.65, and the second TP gives you a ratio of 3.72. Again, very decent setup. So this will be the few pairs that we'll be monitoring for this week itself. So I hope that through this video you find some information that's informative for you. Right, and you're able to pick those things up to apply on your own trading. With that, I'd like to wish you all a happy pipping week, and I'll see you soon.